back to our big picture, our context of turmoil in the global economic system and insanity in the global financial system, I would not see platinum, palladium, copper, or any other out there in the same way I would look at gold and silver. Gold and silver are monetary metals, and when there's concern about monetary debasement, breaking previous record-breaking levels, those are reasonable safe havens. I don't even call them investments or speculations. I view gold as my savings vehicle.
Welcome back to Liberty and Finance. We have a first-time guest who is highly recommended by our mutual friend Doug Casey. This is Lobo Tiggre, the independent speculator. Lobo, thank you for joining us this first time on Liberty and Finance.
Happy to be here.
We're talking with you this Monday, August 31st, 2020, and want to get your perspectives on what has been a very volatile year, all told, for not only major markets, but for the economy, for our rights and liberties, and it's not just regional, it's global. So could you maybe first give us an understanding so people who haven't met you before know of your background? I understand you used to be a writer at Casey Research, and that's how we got connected. But could you just give us an understanding of your background so people know the perspective that you're coming from and the experience that you're coming from?
Sure. And I don't know if it'll scare away some of your audience or not, but the funny and sad or happy truth of it all is that I got to my lofty position, as it were, by being the anarchist, atheist, rabble-rouser, black sheep of the family, which I guess is pretty much what I had in common with Doug Casey. And so, long story short, back in 2004, I helped Doug with his Eras conference. He and his partners were impressed with my work ethic and so on. I knew nothing about geology or investing. I didn't know what a warrant was. But they said, hey, here's a smart, motivated guy, and they gave me a chance. And boy, I changed my life. So I learned from, I think, the best. Doug and quickly Rick Rule and others jumped in there. Had some of the best mentors in the business. This was 2004. So here we are, 2020, 16 years later. It was a long, fun ride. And a couple years ago, I decided to go out on my own. I founded the Independent Speculator, which you can find at independentspeculator.com. You can find out anything you want about me and what my ideas are now, a bit of my history. But that's where it comes from and why I like your theme of liberty and investments. Both my personal philosophy, my background, and what I learned from Doug and others meshes these things together, I think, quite nicely.
Yeah, there's actually that we haven't talked much on our channel about the essential connection between liberty and finance, because I know there was a early 20th century writer, G.K. Chesterton, that many might be familiar with, but he talked about how without protection of property rights, without supporting the individual family and the ability for workers to be able to hang on to the fruits of their labor and so on. In other words, those are financial topics, but without those, you don't have liberty. You're subservient and you're dependent, and it just seems like we're hurtling headlong into a new era here where dependency on governments, especially, and banks, is trying to be basically forced onto us as the norm and as the mandate, as the imperative, and that there's no other option. But we're here to say there are other options. So glad that you're here to help illuminate some of those for our viewers.
Yes, indeed. And I don't want to go down that rabbit hole too far because I'm sure they want to talk about the financial aspects most. But I have to say it's no coincidence. And Jefferson himself had originally written in the preamble to the Declaration of Independence, life, liberty, and pursuit of property. And that was changed in the editing process later. But he understood firmly, as did, I think, most of the founders of the, what became the American dream, right? So big topic, very important. Absolutely agree with you. And the thing that I really got from Doug was, it's all fine to be, libertarian and have all these lofty ideals, but you shouldn't just talk about capitalism. You should do it. You should practice it, and that's what we do now.
Okay, and you just made me think of another organization people might want to check out called TFP, Tradition, Family, and Property. Again, I've always wondered, okay, I understand why they're standing up for the family, I understand why they're standing up for traditional values and certain things, but why are they bringing property into it? And it took me a long time to come and realize those go together, because when they're separated, you don't have that freedom. Can you give us your high-level view? Now, so you focus quite a bit in the mining and natural resources space, and we are going to get deep into that. But could you give us first your broad brush picture of this time that we are in, this strange time that we're traversing, and what you think are the most important major factors that people need to be aware of?
Right. Well, I'm just going to dive in here, and I may make friends and enemies out of this. We live in such a polarized time, and I don't just mean red versus blue, interesting color choices in the U.S., but all I have to do is say the word Trump, and immediately there will be people who hate me because I didn't say Trump, and there will be people who hate me because I didn't say Trump.
Yeah, the Rube immediately divides like the Red Sea into the two camps.
And the other one, which is significant right now, is COVID-19. Immediately, I'll get heat for not saying the COVID-19 scam and fraud, and I'll get heat for not saying the COVID-19 pandemic, the greatest medical emergency of our lifetime. So I'm not wishy-washy. I do have my own views on all this, and I can't talk about anything that you want to ask me about without the context of the current situation. So what I hope, though, is that people will see me as independent, nonpartisan. I'm not trying to gore anyone's sacred cow, nor tout anyone's favorite view, but just call it like I see it. And I have to say that I think it's very unfortunate that Trump is perceived as this businessman who's trying to do the pro-business capitalist attempt to rescue the U.S. economy post-Obama, because his policies have not really been that pro-business. He's done some great things, and his help to the natural resource sector, his direction to the EPA to back down, there are good things. I'm not anti-Trump, but I just think it's a mistake to look at the good that he's done and let that blind you to the problems that he's created, which are many. And the worst, I think, is, and I'm not the only one to say this, but I think the worst danger here is that he's perceived as being this capitalist, and anything that goes wrong on his watch is going to get blamed on capitalism, whereas, in fact, we've really had just bigger government than ever, and that's not good. So the context right now is one of, I think, the global financial system was very much in a bubble before COVID-19 came along. Almost anything could have pricked that bubble, and we have this COVID-19 situation. So again, whatever side you're on the COVID-19 situation, it is a proximal cause for all the huge gyrations we're seeing now. And whatever you may think of the medical issues, and I'm not a doctor, I'm not an epidemiologist, but the responses to it, particularly the government responses to it, are subject that I can dig into, and they're very, very clear to me. So whatever the medical realities of the situation are, we'll deal with that. Let's set that aside. Let's let the facts and let's let science dictate there. As far as our context as investors, as participants in the economy and the world, and especially the world of finance today, we have to understand that we're in a very unstable world. Love him or hate him, Trump has destabilized the global financial order, and the escalated war with China may be completely justified, but it's still an escalated war with our major trading partner there, and it's a big deal. And taking on the Canadians and the Europeans at the same time, maybe it's all part of the art of the deal, but it's rife with risk, and rewriting the rules on many issues. Maybe those rules need rewriting. But doing all this at once is fundamentally destabilizing, and I think that's a reality that every financial actor today needs to keep in mind. And then, so the COVID thing, the government responses, we thought that everything the governments did in response to the crash of 2008 was chart breaking, everything went vertical, up or down, and broke the charts. But those now look like foothills compared to what's been done, and it seems to me to be just the beginning. The fantasy of the V-shaped recovery, it only exists on Wall Street. I think anybody on Main Street can see that there's a world of hurt out there, and it's not going away quickly. Many things will change. Preferences for office space, movie theaters, so many things have at the very best suffered damage that will take years and years to recover, if not change forever. So it's a minefield out there. Very expensive asset classes. Bubbles can keep inflating. That just because things are ridiculously overpriced doesn't mean they can't get more ridiculously overpriced. But there's extremely high risk there, and long story short, I'm sure none of your audience will be surprised if I say all of this, whatever happens next, good, bad, ugly, in the various arena that we're concerned with. I think all of it is very, very good for monetary metals, gold and silver. And from there, we can take whatever questions you want.
Yeah, one of the things that when you're mentioning saying the word Trump and the room immediately divides into camps, it made me think about something that I saw. We've had various people on the past, Rob Kirby, Greg Manarino, Alistair McLeod, talking about the exponential function and how the runaway expansion of the currency supply is reaching this vertical section. Just yesterday, in fact, Alistair tweeted a chart of the M1 showing from 2000 to 2008, 2008 to 2014, 15, and it, honest to gosh, it looks like it's almost vertical. And you think people saying, well, but Trump's doing the pro-business thing or Trump's doing the pro-capitalism thing, and it's like he's the guy on the watch while this is happening, and you can, people who are critical of Obama saying Obama racked up in his 8 years of presidency more debt than all prior presidents in the first 230 years of our country. Well, I think Trump surpassed that. But is it Trump, or is it just the mathematical function and the Keynesian fiat system, and it doesn't matter who you put in the office, we're going to ride that curve up, straight up until we can't anymore? Is your view that that's an inescapable mathematical reality at this point?
Yeah, well, sign of the times, and it's arguable whether there was any choice. If you shut down the economy almost entirely, what are you going to do? I get those arguments, and it's funny enough, maybe won't make any friends who are friends here, but it's also a fact that the same could be said of Ronald Reagan, right? He had Democrats in the Congress, and they kept spending, but you know what? He had a veto pen. And as much as I liked Ronald Reagan's rhetoric, and I loved his idea of getting the government off the back of the little guy, he didn't really do it. And he could have used it if he had used his veto pen. Here's a controversial statement: if Reagan had used his veto pen half as much as Clinton did, we'd have a freer country today. And I got to hold Reagan accountable for that mentally. Anyway, so yeah, circumstances are extreme. Maybe there's no choice. If you don't go along with what needs to happen now, then you're the one who pushes the reset button. And arguably the reset button should be pushed, needs to be pushed, will be pushed eventually whenever we want it. But if you're the guy that pushed that button, you're the guy that's going to get the blame. And there's going to be so much pain when that reset button is pushed. The fact that there will be more pain in the future if it's put off, right, it doesn't change the incentives to the guy looking at the button right now going, I'm not pushing that button. So, you could argue that, there's no way out. What else can he do? He's a politician. But I'd rather see a statesman, and I'd rather see a one-term president who does the right thing and says, you know what, this is going to hurt. It's going to be bad, but it's tough medicine. It's the right thing for the country, and I'm going to do my best to get us back on the right track. I would have infinitely more respect for that.
Yeah, it's almost like if you were a emergency medical technician, you see somebody who's got this festering, swelling infection, boil thing, and you go, yeah, let's just put some more Band-Aids over it. let's not really treat this thing.
Well, that would hurt too much to clean that out.
Yeah, let's put this off till tomorrow. Yeah, it's almost. I was trying to think of a pithy way of saying it, but it's like we're institutionalizing cowardice, and that's when you said I'd rather have a statesman. I'm assuming that's true leadership emerging there, where you say, yes, there is a time when you need to take valid pain for the good of and the truth and doing what's right. Sometimes that brings pain, and that's better than just avoiding pain at all costs, because it's just going to create more later. Back to your point about precious metals as a likely beneficiary of this runaway currency creation and struggling economy and so on. Michael Garcia asks, besides gold, silver, and uranium, anything else that Lobo is bullish on? So maybe first, evidently Michael knows your past or your positions, but why don't you first lay out your thesis on what you see as the current, recent, and near-term trajectories for gold, silver, and perhaps platinum, uranium, before we talk about what else you might be bullish on.
Right. Well, actually, there's a bit of conflation there. First, I make a very clear distinction between what I call monetary metals and expensive metals. And the term precious metals gets used to cover a lot of things, including metals that have never been used as currency or money anywhere in the world. So I think that's a mistake, because different different factors call into play. If you think of all metals, which most mainstream thinkers do, if you think of all metals as just commodities, right, then there is no real distinction. The pricier ones, sure, call them precious metals. Why not? Gold is really no different from platinum, except it seems to be less useful. If you ask Warren Buffett.
Industrially, yeah.
Right. So, but that's looking at it just as a commodity. But you and I know, and I suspect most of your audience knows, that gold and silver have been money through pretty much all of history. Less so copper, but really gold and silver are the constants. Silver is the word for money in many, many languages. And in most languages, we have, tons of expressions like good as gold or it'll be a gold mine. The value is well understood. I don't think I need to make the value case for what gold is. And just a simple reminder of, a frequently cited statistic of back in Julius Caesar's day, an ounce of gold could buy you a fine suit. And that's still pretty much true now. So all the fluctuations of currencies over thousands of years and all the crazy gyrations of paper and fiat systems in the last couple hundred years have destroyed money up and down. But gold is what it is, and it has a certain utility. And believe it or not, for the skeptics out there like Warren Buffett, it actually has use cases in the economy and in our world, besides just the fact that it's perceived as a safe haven. So that is a foundation, underpins the way I look at things, and everything else is different. Even platinum and palladium, which was recently pricier than gold. Those are industrial metals. Despite the idea that we could print $1 trillion platinum coins and use it to pay the national debt, that's an obvious silliness. Those other metals are industrial commodities. Their prices absolutely vary with industrial demand. You can look at what's happening with platinum and palladium now. It's entirely driven by the automotive industry, and platinum is down because of Dieselgate and the move away from the diesel engines, which used it more. It is clearly an industrial metal, as are the others. So back to our big picture, our context of turmoil in the global economic system and insanity in the global financial system. I would not see platinum, palladium, copper, or any other out there in the same way I would look at gold and silver. Gold and silver are monetary metals, and when there's concern about monetary debasement, breaking previous record-breaking levels, those are reasonable safe havens. I don't even call them investments or speculations. I view gold as my savings vehicle. When I have a little extra money and I don't need it for my business or my regular expenses, I buy another ounce or two and sock it away. For speculative purposes, the stocks, gold and silver stocks, offer leverage to the underlying metals. And if I think gold's going up, then that's how I want to speculate on the stocks. But gold itself is not a speculation or even an investment in my view. It's how I protect myself and my family against the craziness that I see proliferating in the world. So the reason why, obviously, Mr. Garcia has followed my work and knows I am also a uranium bull. The reason why I separate uranium from other palladiums and vanadiums and whatever out there is because it has a very special circumstance now where, unlike copper or some other metals out there, the prices are currently well below the cost of production, and that is not sustainable. Yes, the world seems to want to move away from nuclear power, at least in the West right now, but in Eastern countries, it's going gangbusters. The demand, despite all the decommissionings in the West, the demand fundamentals look good. There are more nuclear power plants scheduled to be built than to be retired, and there's not enough. Actually, there's very little even being mined right now. Major mines have shut down. The world's biggest producers have scaled back because nobody can really make good money at prices that are below cost of production. And that is one of those things that makes for a when, not if question. Right? There's, in my mind, absent a major Fukushima-style accident, there's no question that uranium prices have to rise. It'll either be that or there'll be no uranium. And you can't just pour something else into your nuclear power plant and expect it to work. Maybe decades down the road, that'll change. But right now, I see this as a when, not if question. And the when looks near term to me, within the next year or so. And I have invested accordingly. Now, back to Mr. Garcia's question. What besides that? Well, that brings back the context. Actually, my answer is nothing right now. I am very bullish on some of the metals that are very essential to the new energy paradigm going forward. I do see the world moving away from burning fossil fuels. I think that's a one-way change. Whether it should be happening with government subsidies or not, I would say no. But the world is going in that direction. That's very clear. There's a paradigm shift underway, and there are metals that are essential to that, particularly including copper. And nickel is also, despite the lithium batteries being called lithium-ion batteries, there's more nickel in there than lithium by a wide margin. And a lot of battery designs require nickel, which is also used in other industrial applications. So and both of those are facing structural supply issues, whereas lithium is not in short supply. There's tons of lithium out there. So I'm picky about my other commodities, but there are some that in time I'll be very bullish on. But my answer, the long answer short, is right now nothing. Right now, given the potential for more economic downturn, I think it remains to be seen if the global economy can survive the COVID shock. All the money that the governments have thrown at the problem has created liquidity, but not necessarily solvency, particularly for businesses whose models were just blown up. So I'm not looking to buy any other commodities right now. None, not even oil. None, because I think there's a serious potential for a lot more pain in the near term. And until that clears up, when I see the global economy clearly on the mend, then that's when I pull out my shopping list of other commodities. And you already have my hints there. My number 1 and 2 choices are going to be copper and nickel.
If we could, before we leave this arena, if we could talk a little bit further about your views of gold and silver in the next, say, 1 to 3 years, or however long this current cycle that we're on right now continues. You explained your view of them as monetary metals and as places to do your savings. Can you elaborate on where you think the awakening consciousness of that in the minds of everyone is likely to play out?
Well, could play out, likely to play out. You put me more on the spot. Prediction-wise, if we add the word likely.
Well, maybe just what you would be the least surprised to see. I mean, what you expect the most.
I'm good. Actually, let me jump in with an extra layer to the question. I think a lot of people are aware of gold and silver, and they're excited. We've reached new nominal all-time highs in the gold price and silver prices at 7-year highs. Very exciting times. And I think a big question for you, 1 to 3 year time frame is that the peak? Is this a new peak? Is it downhill from here? Or will they hold on? Will they go much higher? And for whatever it's worth, I do not have a crystal ball. I do not claim to know the future. I like to call the odds, as you're saying, what's likely. So my view is that the money printing, just whole cloth money printing, is A, not done, B, very recent. And so I don't think it's worked its way through the system yet. I think there's very little reason to expect significantly lower gold prices in the near term, given that. Especially, we're all waiting for more fiscal stimulus in the United States in the near term. In my view, that makes it very unlikely that we'll see drastically lower correction, yes, but drastically lower gold and silver prices, I don't expect that. I do think that if and when Congress does come through with more stimulus, on top of that, you've got the Fed now not only saying that they're going to tolerate higher inflation, that's official policy for the long term. It's not just higher term in the near term. The new statement that Powell articulated at Jackson Hole just a couple days ago is extremely bullish for monetary metals. He's saying you don't have to worry about higher rates for a long, long time. And that is something that investors in the gold and silver space are wary of. It's not the only factor. There's the dollar itself, there's interest rates, there's other factors. But generally speaking, higher interest rates or the raising of interest rates is seen as bearish for gold, and Powell's just taken that off the table. So I think this is important. I don't lose any sleep at night worrying that I'm exposed to gold while it's at $2,000 or near so. I don't see a drastic retreat in gold. And if we do get a significant retreat in gold, I would see that as a spectacular buying opportunity, perhaps the last great buying opportunity before it really takes off to a higher level. I do think it's likely, given all the government policies, not just in the U.S., but around the world, that we're going to see continuing higher gold prices going forward. And then the big question becomes, what happens if the powers that be lose control of the system? What happens if I'm right that the global financial system wasn't a bubble And in fact, it's already popped and it's deflating, and all the things they're doing now to try, desperately to reflate it. What if that fails? What if they lose control of the monster they've created? If that happens, as crazy as it may sound, the hyperinflation card is in the deck for the United States. That could happen if they lose control, especially with the Fed saying, oh, it's okay to overshoot, and maybe overshoot for years now. Because with that kind of policy, by the time they realize, oh, maybe we've gone a little too far, it'll be way, way late, possibly too late. So I want to be clear here. I am not predicting super hyperinflation a la Zimbabwe in the United States anytime soon. I'm saying that it's possible in the years ahead, and that current policy makes it more likely that once we discover that we're on that path, it will be too late. So here's one way of thinking about this. This really reinforces the idea that we haven't mentioned yet of gold not just as savings or an underlying commodity to speculate on, but gold as insurance. I don't know if the U.S. is going to go into a true hyperinflation. It seems like it deserved to do so many times over the years, and it keeps not doing it. But that possibility is there. And what is my best way to insure against that? Clearly, monetary metals are the answer. Now, could they go down? Could my savings lose in value if things don't play out the way I hope? Sure. But 2,000 years ago, gold bought a good suit. Today, gold buys a good suit. I'm pretty comfortable holding on to my gold as savings, and I'm very, very happy to have exposure to gold in case I need the insurance of hyperinflationary fire in the U.S. or wherever I live.
There's a related question here from Yusuf Yat, who says, do you enter positions in tranches? Are you keeping dry powder in case there's a deflation period prior to inevitable inflation where precious metals and precious metal equities might have a final dip before soaring higher?
Yes, short answer is absolutely yes. I always, let me rephrase that. I never buy everything I want of a certain stock right at once, because markets fluctuate. Even if I think, oh, hey, I bid low and the market came to me and I got a great price, who knows? The next day it could go even lower. That's happened to me. I have been able to average down in subsequent months. I've been able to average down in subsequent days. You never know. So I never buy my entire ideal position in a company all at once. I always buy in tranches. And usually my first tranche or my first two, averaging down a bit, are relatively small, because in commodities and metals in particular, where I specialize, there's enormous volatility. And even without a 2008 style waterfall event or March 2020 style waterfall event, you can see major retreats and fire sale prices in stocks with nothing bad happening to the company that issues them. So I like to buy much bigger chunks when I get a stupid cheap price, as Doug used to call them.
You talked a little bit about dynamics in the U.S. and some other areas. Brian Jenkins asks, would the moves of the U.S. radically to reform both the monetary and social systems producing potentially economic turmoil and potentially leading to internal or external war, given Mr. Tigre's international experience, does he see a, quote, safer jurisdiction in which to ride out this storm?
Well, I'm reminded of the story of the guy, I don't know if it's true, but it's a great story of the guy who saw World War II coming, and he decided to uproot his family and get out of harm's way and move as far away as he could. He moved out in the middle of the Pacific Ocean to a little island called Midway. That didn't work out too well for him, even though he was right. So, this is a global phenomenon, and almost anywhere you go, I can't imagine. I mean, what's going to be safer? Maybe Switzerland, but even the Swiss franc isn't what the Swiss franc used to be. It's another fiat currency right now, with foolish peg experiments and so on. I will say, well, maybe two things. One reason why I live in Puerto Rico is because of the tax incentives here, obviously a major inducement. But another reason is that if things really went bad, like crazy bad, you can't freeze here in the winter, no matter how hard you try. And food grows here all year round. I could see a terrible dislocation here if things really went wonky. But this is the kind of place where people will survive. They can They may be lazy now. They may not want to work the farms, but the farms are there. You can grow mangoes 4 times a year, all kinds of crops. I'm not worried about that. I'm, there are great quality of life places. Doug loves Thailand, places like that. But I just don't see any places safe. If the U.S. dollar falls, that's the underpinning of a global financial order that I think leaves no place unscathed. And so here's maybe the better answer. Instead of here's the midway basket to put all your eggs in, is to embrace the permanent tourism philosophy, where you put your eggs in diverse baskets and you try to live in countries A and B, have your businesses located in countries C and D, have your banking in E and F, and distribute your life, your assets as much as possible. I know that's a tall order. It's not easy for everybody, especially if you have family or businesses that root you in one place. It's not easy to do, but you can begin. At the very least, you can open an account with one of these bullion trading and storage companies that has, registered, audited vaults in other countries, so that you're not subject entirely to, the next confiscation in the United States or wherever you live. That's one baby step that anybody can do. And by the way, if you are an investor, you should consider a U.S. taxpayer investor. You should consider the Puerto Rico tax incentives, because they're phenomenal. I personally have a contract with the government of Puerto Rico giving me a zero capital gains tax, short and long term, until February of 2036. So as a speculator, as an investor, that alone is worth being here. It's huge for me and worth considering for U.S. taxpayers who, you really can't get away from the long arm of the IRS anywhere else.
Back on the topic of jurisdictions and some of the unexpected pitfalls that people might not think about, we've had viewers enter cautionary comments when we've had guests on, such as we had a off-grid medical doctor who operates a major relief compound down in Haiti, and others who are suggesting other either Asian or South or Central American countries, that sort of thing. And the cautionary theme goes something like this: is when times get tough, even when times are okay, you kind of may stick out as clearly an Anglo, clearly not from those parts or whatever, but if times get really tough and everybody's hurting even worse than they are, you're already known to be well off or at least comfortable or whatever, then you might really have a target on your back. So without, you mentioned words you can't say without pushing buttons. So here's one, at the risk of sounding racist or whatever, is like yourself, you clearly have a very authentic Spanish accent, that sort of thing. So do you figure that you can blend right in and be a gray man there in Puerto Rico, even if things go really tough? But many, say, U.S. expats might not be able to pull that off in the same way if they go to Thailand or go to any place else.
Well, actually, I would say that that's an argument in favor of Puerto Rico, and I'm not trying to sell Puerto Rico hard to anybody here. They do speak Spanish here, lots of broken pavements and just crazy wonky things here that are no fun. It's America's little slice of Latin America. But it is part of the United States. So this is a domestic flight. You don't need a passport to get here. You are still a U.S. citizen if you're here. And that actually is a big plus for people who can't go off to try, starting a Libertopia somewhere far off away. And you do have U.S. federal law applies here. You can drink the water here, that sort of thing. So, and there are a lot of non-Hispanic looking people here. So I don't think, you're dealing with a situation of a darker mob turning against a lighter skinned mob. That said, and being frank, this is one reason why I did not choose to live in one of the gated communities where a lot of the expat lives. There are some very ritzy gated communities here with multi-million-dollar mansions, and you're you're very much, you might think of yourself as the shining beacon on the hill, but that also makes you a target. If things ever did get bad, that's the first place an angry mob would, I think, go look for revenge. Whereas I blend in. My mother is from Mexico, by the way, so it's not just that I have a big freckle covering me all over. I earned the blood and the language. So it's not just that. It's just that I'm a Puerto Rican now. I'm a card-carrying Puerto Rican. I'm here with everybody else. I shop with everybody else. And no, I really don't worry about that. We've been here for 6 years, and I've never felt in personal danger, even wandering out at 2 in the morning or whatever. But in other countries, I think that's potentially a concern. The greater the divide between the haves and the have-nots, the more the concern. And the really scary thing is that's starting to happen in the U.S. now, in a more violent way than perhaps since the 60s. And I was just a kid then, so I can't really compare this to the Watts riots or whatever. But the degree of hatred, and whatever side anybody comes down on any of the divisive things we've talked about, I would make a plea for not hating the enemy. They think you're just as evil as you think they are, and there's so much misunderstanding here. I don't think it helps us to hate the enemy. If you have to fight the enemy and oppose them in Congress and wherever ideologically, fight the good fight, fine. But let's all try not to bring any more hatred into the mix here, because that makes resolution all the more unlikely, and more violent resolutions, more likely, and that's really that's really bad. And the have-nots outnumber the haves, so it behooves the haves to consider ways to resolve issues as peacefully as possible.
You've spoken a few times about the potential for coming more volatility ahead. Some people are tying that to the contention around the upcoming election. We certainly saw some uncivil behavior even after the last election, and now it seems like we're up at a whole new fever pitch recently. LS asks, with the upcoming election, do you think if Trump loses, he might manipulate the Exchange Stabilization Fund to make the stock market plummet out of spite, or suggest to the world how imperative he is? Who truly controls the ESF?
That's the kind of question that makes me think that some other newsletter writer has written a really exciting article about this ESF, and that has people all excited about it, and the ESF, that could be a big problem. I think it's a peculiar way to frame the question. If our concern is what happens if Trump loses and doesn't concede, that's a very straightforward question, with or without the ESF. I will tell you, I'm not an ESF expert. I'm not going to claim to know exactly how that might be abused. I will say that it's really not a market regulatory phenomenon. It's used. It's my understanding that it's intended to regulate forex imbalances. So it seems like a peculiar thing to worry about regarding Trump's impact on the markets and in general if he loses the election. I think just losing isn't necessarily as dire for markets, at least immediately, as people think, because right now the markets want more easy money. And one could argue that a Biden presidency would be even more easy money. So it could be, woohoo, party time on Wall Street. That said, it's very clear that a Biden presidency or a Harris presidency, if he doesn't last that long, would take the country in, be a hard left turn. And that would have mid to long-term extremely negative consequences, which ultimately would affect Wall Street, Main Street, every street in between. And that's bad. And at some point you realize that, maybe when the new budget goes in and they see all the things that are actually proposed, who knows? So I think that's one thing to consider either way. I also, but I can't see Trump as a pure angel here who's going to save us from all this, because he's asking for trillions of dollars also. He's using executive power in ways that, in my non-scholarly view, seem clearly to be unconstitutional to try to do what he thinks is good. And even if I agreed with him on the policies, I would have to say that it's extremely dangerous to erode the Constitution in that way, because then somebody else gets in whose policies you disagree with and uses those same tools and says, hey, Trump did it, I can do it too. So these things concern me greatly. Now, what if Trump doesn't concede the election? I have to say there's been a lot about this, and Trump hasn't helped saying, we'll have to see. But it would be an off the charts kind of change for a U.S. president to say, no, I'm not going to abide by the election. That just hasn't happened in 200 plus years of history, and that would be grave indeed. And given the hatred we were talking about, just look at the Portland clash. That's not just hippies versus police or something. That's red versus blue, and guns came out. and that's just a small clash in a modest-sized city. You have a president failing to concede an election. You could bring out red and blue in large numbers that could really throw this country into something we haven't seen since the 1860s. And whatever you think about the rights or wrongs of that, the consequences for that are huge. It would be a very unpleasant situation for everybody.
There's a question here about the next stages of our monetary system. 49 Fine says, when we are forced into a digital monetary system, seems to be coming faster than most people realize, in his opinion. How will it be possible for us stackers to convert our precious metals into other assets or currency when the time comes out without being, quote, tagged by our Snoopy Uncle Sam?
Well, you're not going to like this, but you're already looking for a tag. It's perfectly legal to go down to your local coin shop and buy gold or silver for cash. No record of the transaction. That's not illegal. It's perfectly legal to go down to the same shop or another one and sell for cash. You're not required to keep a record of that by law. But if you made money on that transaction, you are supposed to declare that. Now, how they're going to know that, that's a whole other conversation. But the fact of the matter is that you are supposed to declare that, and it is increasingly difficult to trade in any space, including the monetary metals. I mean, you pretty much have to go down to your local coin shop and pay in cash if you want to avoid a paper trail. You buy from Kitco or whoever online, there's a paper trail. And, know your customer rules, all that stuff. Don't imagine that the government doesn't know, all the gold and silver you're trading electronically right now. Or at least can know if they care to look and investigate you. So if you want to avoid problems with the long arm of the IRS, it already behooves you to do everything you possibly can to comply, keep records, and do all that stuff. Switching that to a digital format doesn't really change that. It might even make it simpler. But I think the real question here isn't really, will the advent of FedCoin or whatever it's going to be, will that, that's one issue. And frankly, I'm not sure that really needs to happen. They can already print all the dollars they want with a keyboard. They don't need to invent FedCoin to just deposit $10,000 into everybody's bank account tomorrow if they want to do that to stimulate the economy. They can do that now. Everybody has a bank account. So to me, the big question really is, will the U.S. or other countries ban bullion again or confiscate it? Will governments try to grab the gold again? That is possible. It's happened in the United States. If it can happen in the United States, it can happen anywhere. When Roosevelt did it, it is notable that he couldn't just confiscate it. You can't just steal it. Even Americans at that time, I shouldn't say even, but certainly Americans at that time would not have stood up to simply have the government take something from them. And regardless of the Fifth Amendment, the takings clause, you can't just take my gold. He bought it. He paid remember, gold wasn't free to trade. Gold was set as a certain price of gold. So they didn't just take everybody's gold. They called it in. They basically redeemed the gold in circulation for ferns. And so they paid for it. They took it, but they paid for it. And then they devalued the dollar 75%. Suddenly, what you got paid for it wasn't such a good deal anymore. But they didn't just grab it. And to do that now, to confiscate gold now, when we're no longer on the system, like before, they basically called in the gold that was in circulation as U.S. currency. And you could argue that the president had authority to do that in an executive order the way he did. Now, gold isn't in circulation. Even the mint coins that we have, those are tokens. Those are collectibles. They're not supposed to be a specie. They're just, what as Bernanke said, they're just a tradition. So for the government to steal that would be like stealing grandma's silverware in the candelabra on the dining room. That would be stealing your private property. And I think that would be very difficult. And for them to do that would be an admission of all kinds of things the powers that be really don't want to admit, which means if it happens, it's an endgame. If it happens, it's probably prior to a re-embracing of the gold standard, at which point, without encouraging anyone to do anything illegal, at which point I would say it would be advantageous to the people who have stashes that are undocumented. I'm not predicting that the U.S. will do that. I'm saying the circumstances under which the U.S. would do that would be extreme. At that point, it would be possible, I think, to liquidate potentially confiscatable assets and turn them into houses, shopping malls, who knows what. If the U.S. government or any other is so worried about gold that they're going to steal everybody's bullion, I mean, you're looking at tens of thousands, possibly even hyperinflationary hundreds of thousands. I mean, think Zimbabwe. So you cash out your gold and you instantly take whatever currency you turn it into and turn it into real assets that would be harder to confiscate.
Wow. That's something that a lot of people are starting to look towards, and they're saying, what's the next move? You mentioned real assets, and you also mentioned earlier that until you see signs of real life in the economy, you wouldn't necessarily be plunging into commodity, like commodity metals, that sort of thing. So we're going to have you back on as this unfolds, and as we move forward. You mentioned not having a crystal ball, but we do go through the fog here and we get a little bit farther down the road, so we'll see things a little bit clearer as things go forward. Meanwhile, if people want to follow your work on a daily basis or weekly basis, where should they get plugged in?
Well, thanks for that opportunity. So certainly come by independentspeculator.com. There is a free email list that you can sign up for that sends out just one weekly email. And I promise we will not spam you with a flood of daily advertisements. I loathe and despise those marketing tactics. You get one email per week that you sign up for, and that's it. And I think in 2.5 years I've been doing this, I have sent out one special notice to that list. But it's pretty much you get what you ask for, which is a one weekly digest. On a daily basis, the best way to follow me is on Twitter. I also have Facebook and LinkedIn accounts, but I'm most active on Twitter, where it seems like most of my readers are. My handle there is @DueDiligenceGuy, and I post there on a daily basis, several times a day, the latest market gyrations. Even before I have a time to put out an alert to clients, I will comment on significant news on my Twitter feed. So that's a good way to stay in touch.
So we've been speaking with Lobo Tiggre, the founder of independentspeculator.com. Lobo, thanks for joining us this first time on Liberty and Finance.
Thank you. It's been interesting.
If you've decided that now is the right time for you to protect your family's financial future by acquiring physical precious metals, gold and silver, I'm delighted to let you know that I have now become a licensed dealer's representative for Miles Franklin, one of the oldest and most trusted names in bullion dealerships. And we can provide you with physical delivery to your personal possession or to professional vault storage or precious metals IRAs. Just email me at libertyandfinance@protonmail.com, and please include your name and phone number in your email to libertyandfinance@protonmail.com. We'll get right back with you and find out how to best meet your needs so that you can either begin or increase your acquisition of physical precious metals now and protect your family's future starting today.